The latest US economic data shows a decline in the main indicators. For example, in February, retail sales increased less than expected. The slowdown in the American economy is putting pressure on the greenback. However, a trade war between Europe and the United States could trigger a real global economic crisis. In that case, the safe haven dollar would benefit. But in the short term, macroeconomic reports do not look as alarming. You are watching Traders Calendar for March 20. The first half of the day will start with the release of Germany's producer price index data. And in January, price growth slowed to 2.5%, which was lower than both the figure recorded in December, 0.8%, and the market expectations. The main growth drivers were consumer goods, while energy prices continued to decline. In February, inflation is expected to accelerate to 1%, which could signal higher consumer prices in the coming months. If confirmed, this would strengthen the euro. Next, traders will shift their attention to the UK labour market. In recent months, it has shown stability. In December, employment unexpectedly rose by 107,000, significantly exceeding November's increase of 90,000. However, forecasts for January suggest a decline. If the predictions come true, the pound sterling will lose value. March will also depend on the future monetary policy projections from the Bank of England and inflation trends. The Bank of England will also announce its interest rate decision 5 hours later. After a 0.25% cut in February, the current rate stands at 4.5%. If the bank keeps it unchanged, the pound may come under pressure. At the same time, any hints at a pause in the rate cuts during Andrew Bailey's press conference could support European currencies. Markets are also closely monitoring US weekly employment reports. So far, initial jobless claims have remained relatively stable, holding at 220,000 for the past 2 weeks. However, forecasts suggest a slight increase to 225,000. If confirmed, this labor market slowdown will pressure the US dollar. Shortly after, the Philadelphia Fed's manufacturing index will be released. In February, the index saw a sharp drop from 44 points to 18 points. Leading indicators suggest another decline in March by more than a half to 7 points. Weak business activity is a key factor that could push the US Fed Reserve toward future rate cuts. A disappointing report on this day would negatively affect the US dollar. The real estate market is another indicator of economic health. If the US home sales in January fell to the lowest level in 7 months, February's forecast points to a further decline from 4.08 million to 4.03 million transactions, and this signals weakened consumer spending and lower investments, which will likely lead to a further drop in the US dollar. Also, this day, the European Central Bank will release its economic report. In addition, speeches from the ECB President Christine Lagarde and other financial policymakers are expected. Their comments often trigger volatility in the currency market. Please note that the time of publications is set in a GMT plus 3. The next video review of a trader's calendar will be released on a Thursday, March 20. And now we wish you profitable trading and see you soon.